Indicators point to a local bottom for Bitcoin. And in this analysis, I'm going to take a look at the things that influence this week's price action, show you the indicators I've been looking at, and see if we can identify potential scenarios in both directions, because, you know, I always like to keep things kind of neutral here for you. So, sorry I missed you guys yesterday. Had some unforeseen circumstances, got pulled away, and had to go help out a family member. But you know what? Everything's good. Glad I was in a position to do that. Family first, you know, my motto. Trading obviously comes second for me, but probably maybe it's not the case for you. So we're going to take a look at some of the things that kind of transpired here over the past week or so that got us into the position that we are in now, and also to look at the indicators that I've been watching to see what's given me clues, given me vibes that we've got a local bottom, and that well, what this might look like compared to other things that we've seen in the past. And as I said, I always try and keep it neutral for you, show you potential scenarios in both directions, because I think that's always important to do when you are trying to manage your risks. So before we climb in, do me a favor. If you enjoy this, just right off the bat, just go ahead, hit the subscribe button right now so you never miss another live stream. And while you're at it, if you like these, please do me a favor, smash all the buttons, share a comment after this live stream. And hey, even on YouTube, the live comments are open. So if you want to engage, I'm happy to do that with you. So climb in and join me for this one. So, you know, yesterday when I left in the morning. I had just kind of written out my analysis, looked at where things were going, liked a lot of what I was seeing. And when I came back, I left like right after the jobless numbers came out. And when I came back last night, I came home to like a 12% candle and was like, oh, wow, that looks pretty good. So, you know, what a difference a day makes, as the old adage goes. And you can really see this illustrated absolutely perfectly in the crypto fear and greed index. You know, a lot of people don't like this. A lot of people do follow it. I think there's some merit to this graphic. And, you know, as you can see, back on Tuesday, we were down, extreme fear down at 17. We got a little bit of a recovery after that. News that, hey, maybe this huge pullback that the sky wasn't indeed falling. And it still might be, but, you know, who knows? And then yesterday we were back down extreme greed, extreme fear territory again at 20. And then this big candle put us right up here back to neutral at 48. So that's pretty interesting nonetheless. Let's talk about that data, right? That data that came in. Oh, I've got to go back to let's just show this month. Hey, why not? So yesterday, you know, actually this whole thing actually started on Friday. The big decline that we saw started a week ago Friday. The unemployment number came in on the hot side, a 2 basis point blip, pushed things up to 4.3%. And the market started screaming fears or showing signs of fear that hard landing, recession is imminent. And they were screaming for Chairman Powell to have an emergency Fed meeting and an emergency rate cut. And it didn't happen. And I'm glad it didn't happen, because I think that would have just really stoked the panic in the market and probably led to a cascading effect that took us down even deeper. We know that the Fed tends to cut rates when things are getting, when the unemployment rate is heating up, and it is heating up. I think what the market is looking at this point, after seeing yesterday's numbers, which came in not so bad yesterday, that you know, hey, maybe things aren't as bad as it may seem. And that's not even the right numbers. This is yesterday's numbers. Where am I? Here we go. So yesterday came in initial claims came in cooler than expected, cooler than forecasted, and cooler than last month. And that definitely seemed to quell some of the fears that the market has had about this unemployment situation. Now, we don't want to see a big, massive spike. You know, Powell has been slow and methodical through this whole process, arguably way too slow in the beginning, potentially way too slow right now. But Let's see if he can navigate towards that soft landing. It's rate cuts in September are baked in pretty solid right now. I would be very surprised if they don't cut in September. But he's going to tell you, he's going to speak sometime in August, and he's going to tell you we're data dependent. Things are trending in the right direction. We're hoping that continues, and we'll act in September. So or not. So we'll have to wait and see how that plays out. ETF flow is also something that I'm always in tune to. Interestingly, yesterday the ETH situation slightly negative. And obviously a lot of outflow. The downward pressures are coming strictly from Grayscale. Really, Fidelity had a little bit, 2.6 million yesterday in outflows, but we're hearing about big numbers in ETF flows. And I'll be honest with you, I'm not seeing the numbers that I'm hearing reported reflected in this chart from Farside. Maybe there's some different sources that you guys follow, but for me, I've been following this one since day one. Positive day of inflows for Bitcoin yesterday, even on the rise. Things were flattened out a little bit, and outflows were peaking when price was dipping the most, right? And so that's kind of interesting to me. It's starting to not make a lot of great sense, to be honest with you. At the moment, we'll see how that changes as we move forward. And of course, the CME Gap was another thing that we had talked about last week. Let's pull that one up. Yesterday, actually, when I started, getting ready to do my analysis yesterday, price was nosed up. We've actually seen this a couple times this week, where price was nosed up to the gap, and it just didn't happen. Right, that gap fill didn't happen, and of course, as you can see, yesterday it actually did. Let's go to the daily chart because this is a little bit noisy for me. And I'll turn off trend precognition and whatever else is going on here, and the VWAP, and clean that up. And you can see we did, we tested this. We attempted a couple of times, and then, obviously filled the gap here in the last 24 hours. So price now receding back from that high. These are futures prices, by the way. But that was obviously a big move. Normally I'm used to, I don't gap trade, to be honest with you, but normally when I'm watching this thing, it's always, price is going to fall back and fill the gap. Well, in this case, price fell through the gap when the market was closed on the weekend, and it took quite a bit of effort to race back up through the gap. So now, while I was looking at these gaps, there happens to be one way down here at the 20K range. I wonder if that one's just going to live and lie there like that, or if someday that does eventually get filled. You can't rule anything out in this game, right? You just can't. If you've been in this game for more than 10 minutes, you know that you need to be prepared and expect for the unexpected. I do not think that this is a scenario that's happening anytime soon. But that said, I always try and keep a little powder available for extreme opportunities when they present themselves. And one certainly presented itself to us here this week, as we saw Bitcoin price went plummeting down to a new local low. And this is the question here, right? Is this the local bottom now? We had, in previous weeks and previous months, we thought that local bottom was around 60. That didn't hold. We went down to deeper levels, which also did not hold, since we had been up here, at this all-time high. And so now we created a lower low, which was not encouraging. And we have a series of lower highs, also not encouraging. So at this point, will Bitcoin be able to climb back up, print a higher high, and get back above this 2021 top, and then start working on all-time high levels? That remains to be seen. And there's a lot between here and there that we have to be watching for that to happen. Okay. So the good news is, I talked about the indicators that I've been watching, at the top of this, and this is certainly one of them. Trend precognition has been, trending upwards through that dip. Since we hit that dip down to 49.5, we had signals since printed here on those candles. And yesterday was, I'll be honest with you, this was not an expected move to go this high. I did expect to hit resistance at the 200-day moving average. And interestingly, we're kind of in a situation where we just had a death cross between the green 21-day and the blue 100-day moving average. But these are lagging indicators, of course, right? And now the 50-day and the 200-day seem like they are on a collision course. So we could see a death cross here before the end of the week, unless we can get another celery stick like this one that blows us out of this situation. These are not the be all end all. Again, they're lagging indicators, so you have to wait and see. MACD rolling over. This is another trend precognition algo, by the way, and this one right here, the A1 algo, was actually indicating that trend shift ahead, well ahead of the MACD. And now you can see here through this orange A1 slope line, which is a real-time indicator. It moves in real time. It's showing us that we had that, momentum rolling off the top. This does not necessarily, mean a crash or anything like that. It just means that, there's a loss of bullish strength, which is evident right here. But you would expect this, right? This was what? This was a 12% candle. You would expect to have momentum fade just a bit. And bulls really need to regroup, regain their strength, and build momentum to go running after these levels again. That whether that happens here this weekend or not remains to be seen. So, even before yesterday's jobs data, we talked about the fact that there was a lot of fear when price came down here, right? And so this was, I think the recovery came from the fact, or at least the initial recovery came from the fact that it became evident that the Japanese carry trade unwinding was responsible for a big market crash, and Bitcoin and crypto for that matter, being a 24/7 tradable asset, was the first place that people could take money off the table, right? You couldn't get to TradeFi because it wasn't open yet, at least here in the US. So Bitcoin or crypto and crypto assets for that matter were the low-hanging fruit, and that's why we saw a big sell-off. Also, by the way, remember, Mt. Gox distributions have been going on, right? And we know that Kraken completed theirs last month, and then it was coming to Bitstamp, and those Bitstamp distributions are probably, at least a lot of them, done or close to being done in terms of getting those assets in the hands of the investors and traders. When price was going up, when Bitcoin price was going up, it felt like, hey, maybe a lot of these guys are maybe just going to do some profit taking because they're in immense profits from Mt. Gox, right? Just tremendous profits. Why not take a little off the table and then let the rest ride? Well, when we started seeing this big dip happening, maybe there was more profit taking coming in at that time. Nonetheless, the ship seems to have righted itself, at least for the moment, right? And in terms of where we go from here, obviously depends on a number of factors, but there's one that always stays true to me, and that is liquidity in the order book. And liquidity equals sentiment in my perspective. And where it is and where it isn't matters. Where it's moving also matters. And so you can see that our biggest concentrations on the bid side are down at 45K and 50K. 50K is heavier. And then we have, some has floated up here. The concentration was at 55. Then it went up to, 56. Then we got some at 60. Now that's fading back a bit. And now we're in jeopardy of losing 60 as we speak. It's held so far for the day. Well, it looks like maybe there was a wick below. Was there? Yes, there was. There was indeed a wick below. But it's back up there above 60K. Whether this holds for the weekend or not remains to be seen, right? So I'm watching this liquidity as I always do in the order book, and I'm also watching the order flow here of on the bin CVD. And so if we, I gotta, if we, I got to refresh, you can see, some issues here. You have ask liquidity actually building, gaining strength here at this 70K level. 56 million right in that one spot right now. That's the heaviest concentration we've seen at that level in quite some time. Since back in, oh, I guess it wasn't that long ago, back at the end of July, when there was 60 million there at that point. Point being, there's a lot to get through up here. And so before we can get to that, I maintain that, as I have since we first interacted with this level, I maintain that we have to RS flip this 69K level right here. That's the 2021 top. And we have interacted with it dozens and dozens of times since back in when we first touched it back in March, right? And so, and I may have written that improperly in the oh, excuse me, that's not it. It's right down here. It's down here. So it was early March when we first hit that. So I think of the written analysis, I may have put February, but it's actually March. So we've hit this so many times, we've interacted with it so many times and failed to really hold above that level. Yes, we did have a brief wick to a new all-time high, but that just was not a sustainable move. As you can see, we have been down many times below this level, up and down, up and down, up and down. And every time we interact with it, I say, if we are wicking below, chances are it's not going to hold. So I'm looking to print full candle bodies above that level. And until that happens, I just don't see a sustainable move towards an all-time high until we RS flip this 2021 level. And a lot of people say to me, that's not really the most important technical level. We have, more liquidity higher. This 71, almost 72, 71 9-ish. We have higher highs here. Yes, these are important. We have got to print a higher high above these 71 9 levels, right? But, and again, in my perspective, even if we wick through that, it's not sustainable until we have full candle bodies printing above this 69K. And this looks to me, I was looking at the chart earlier today, this looks eerily familiar to me. I want to show you something. Let's take the trend signals out and clean this up a little bit for you. Way back in, when was it? 2017, 2019. Yeah, it was after things broke down here, right? After we first made that all-time high at 69K back in 2021. And we went into the bear market, things broke down. We broke down below the 2017 top, which was, way down here, right? This top, which took a long time to get to, that was the coveted 20K level, right? So we broke down into this trough, had some distribution rallies to get back. That was hopium. Never penetrated the key moving averages to get back above. Things broke down, and then of course we had the COVID crash. But look at all the interactions we had at this level. So this what we're seeing right now is giving me this kind of vibe right here. And I'm not saying that it's going to necessarily take the same 7 months that it took to actually get through this. It possibly could. But I'm not saying this because of the time frame. I'm just saying it because of the amount of time we interacted with this level and did not actually break it. This was a very important level. This was very hard to break, that 20K level, both because of the psychological factor of 20K and because it was indeed the 2017 top. And that is exactly the situation we have with this level here, right? And so potentially, maybe this was the big dip. Maybe this was it. And again, if these signs are pointing towards local bottom right now, then this would be it, and it holds, then this would be it. But things can always go the other direction, and we'll look at that in a second, right? I still, none of these levels were ever retested. The 25 to 30K level never got retested. Support never got retested at this 40 to 45K level. We finally got the retest here at this 50 to 52K range, and a little bit lower. I would have been even more pleased if we went down to this 48 because there's some confluence at that level that would have been interesting to me. Um, right? You can see it all the way back to 2021. But that didn't happen right here on the weekly. So the rebound came from basically the 50-week moving average, and of course the news that things were getting better. I mean that the big dump came from the Japanese carry trade. Um, so Anthony says, what does Anthony say here? He says, it's not. Why isn't it showing up? There we go. Hey Keith, I'm trying to remain uber bullish, but I see multiple lower highs and 3 lower lows. If you draw a line from 2021 all-time high straight across to now, it's not great. Agree, totally agree. And we just talked about these lower highs and lower lows. Not great at all, right? So one of these lower lows eventually has to turn into a recovery. Is this going to be the one? And that's the question here. And so as I just said, we can't get to printing a higher high until we and well, we could wick into a higher high, but I don't think that move is sustainable until we RS flip this 69K. And as you can see, the first higher high that we could make here is at right at 70K. And there is so much liquidity stacked at 70K right now that seems like a very tall order. Now, history has shown us that, and thanks for your comment, Anthony. History has shown us that, when the sentiment is there, then no amount of liquidity is impenetrable, right? And I could go back to history and show you that. But typically when that happens, typically when we get the moves that are going to push us into those and push us through these deep spots of liquidity, we see more coming in. And sorry guys, my internet connection sucks today, as usual. We're going to see more. So you see heavy concentration here at 70K, but typically when we see those breakthroughs coming, when we see enough to push through large amounts of liquidity overhead, we see more bid liquidity coming in with some depth and some heavy concentration. We have some depth. We have depth actually down almost to 30K. That's not so encouraging, by the way. What we're missing is these brighter spots. These brighter spots equal heavier concentrations of liquidity, more volume, right? So what we don't have is this heavy concentration in this range. They can show up in an instant. That's how it works. They appear instantly. But so far we're just not seeing that. And there's a lot of catalysts that could happen to trigger that. Considering the situation with the economy, considering the situation with the geopolitical environment, considering the situation with the U.S. elections, all of these things can have an impact on price action. So those are things to watch for. Now, like I said, that could show up in an instant, and it's not there now, which doesn't look great, doesn't bode well. When it does show up, I promise you, I'm going to see it. Because I'm watching this every day. And if you're watching fire charts, you'll see the same thing, or any order book liquidity for that matter, right? So now let's kind of focus on what could be happening here at the moment, right? As you can see, these really modest size bid walls here have faded back a little bit below 60K. We were propped up above 60, and that now seems to be fading back on this loss of momentum. So maybe this is the guardrail for the weekend. 22 million stacked at 50K. There's a lot of psychological support there as well. Obviously, 70K looks tough to beat. I would dare to say that 65 might even be the guardrail for the weekend. There's a lot of liquidity here. A lot of short liquidations stacked in the 65 to 66K range. So that can also come into play. I think that's going to be difficult to get through. There's going to be, and those who are short here are going to be trying to protect this. So, conceivably we see blocks of liquidity raining down from above, as we've seen in the past. That's something to be watching for over the weekend. I promise you, whales rather are not going to be giving you a break this weekend. So just be prepared for that. And if you know what your targets are and you know what your risk tolerance is, then you're okay. If you're a long-term investor, you're probably okay here. If you're trying to trade these swings, the momentum has faded here at this point. So you're kind of right in the middle right now. Things could certainly fade back here to this 50K level. And we can also likewise see a retest of this level, right? So we're saying this looks like a local bottom, but it hasn't been retested. So keep that in mind as well. I can tell you this, that I am a very conservative trader. And when price wicked down here, before I knew what was really happening, I was concerned. I did initially take a position down here at 50K. But when things started to fade back, before I understood what was happening with the carry trade, I ended up sliding my stops up into profit because I was worried that we were going to go down lower, potentially to 48, potentially to this 44. This is the one I was really, really hoping for, and it just didn't materialize for me. So this is the one that I've been calling for since we left that range. This would be a 40% move, a 40% correction, which is something that I talked about pre-halving, that this was certainly on the table. It hasn't happened here, right? But if it did, or if it does develop here, you see that there's a logical reason why. And the logical reason, other than the fact that it didn't get retested, is that look at the confluence here with where we are on the chart right now. Okay, if we got to the trend line, that gets you right there. So this is why this is still on my radar. It's still why I still have powder saved for this level, and a little saved for this level just in case, because you never know what's gonna develop here. There's a number of black swans circling the pond at any time. You never know when one is going to land. What was the other deal here? Anthony asking again, what's your thought on a September rate cut for crypto markets? There's no question that at this point it is baked into the market. It's baked into price at this point, whether it happens or not. Obviously, like I said at the top of this, Powell speaks, I think, from Jackson Hole this month. And he's likely going to telegraph, he's going to hold his messaging that, when they're confident 2% target, blah, blah, blah is in focus, then they will, that we're trending towards that, then they'll make the cut. I think the cut it's certainly baked in. I think it's imminent at this point, and there's going to be a lot of noise about whether it's happening too close to the election and they're trying to skew the election. He has made it very, very clear since the very beginning that this has nothing to do with the election, does everything he can to avoid that situation, to avoid the politics of it, and do it based on the economics. The man has served through multiple administrations, Republican and Democrat. Just let the man do his job. So yeah, I think it's coming. I'd be shocked if they don't. It's really going to piss off the market if it doesn't happen. Had Google Trends had its highest spike since March? I haven't had a chance to look at that, but whether it's fear, whether it's greed, those searches coming up is good to see. And remember, when there's fear, there's always greed on the other side. So this move, in my opinion, really put the whole be greedy when people fearful, be greedy when people are fearful scenario to work right here. No doubt about it. So what I was saying, my fear also kicked in where I did get stopped out and I bought back in, and same situation happened. I wasn't able to watch the charts. And I was like, oh man, not sure how this is going to develop. And I got shaken out a couple of times in profit, fortunately, but had to continue to buy back in. And yesterday when I saw this move developing, and it was literally right after, right as actually we were getting the news on the jobs data, That's the point that I saw the buying begin very aggressively, and I added to my position there. So, you may argue of whether it's too late or not. It's not too late. Okay. Now, at the moment, if you're looking for a short-term scalp or something like that, it might be too late. You got to wait for another opportunity to enter. But if you're building a long-term portfolio and you are dollar cost averaging your way in, it's up to you to identify those key levels that you want to do that at. We're in a range right now that, whether we get back to 50K or go sub 50K is is anybody's guess, but it's a lower probability after we saw this move. So if we do indeed see a lower low, as Anthony was pointing to, and gosh, we just lost 60K at the moment, right? If we do indeed see a lower low, things really start getting dicey, in my opinion. I'm willing to go to this 45K range. I think that's got merit. That would be just a tremendous, this trend began back at the FTX crash back at 15.5, right? So for this trend to remain intact, we've got to stay above this level. This 200-week moving average, that's way down there. That's a bleeder and a half. I'm not sure I would want to take that ride. And gosh, if you lost this, this may be the early indication that it's over, but this would be the confirmation. If you lost this 200-week moving average, it's done. It would be done, in my opinion, unless there's just something drastically glaring that we haven't seen. So one more look at the order book as things are shaping up for the weekend. Again, I'm looking at guardrails at 50 and 65K. That's a really wide range in terms of a range trade. Potentially, you see we have about 11 million here at 56 level. So, 56 could potentially hold here. But I think we're going to stay in this range. I think we're going to stay and look at this little relationship here between this top and this bottom. That might be a little sussy, as my kids would say. Nonetheless, it is what it is. This is the playing field as I see it. And with this stair stepping down, you better believe that this has the potential to draw price down as well. So let's see where we go from here. All right, 50K remains the strong spot. Maybe this holds. This is really an effort, in my opinion, to shake out as many people as they can. And zooming into the lower time frame, by the way, these are not as aligned as I thought. At the higher time frame, things are consolidated and compressed a little bit, and so this is not necessarily the same entity doing this right here. So keep that in mind. Support, our local support is right here, 58 and change. So if we could stay up here, that would be fantastic. That would be bullish. If we could close the week above 60K, that would be a flex, in my opinion. But this is going to be a challenge. And as I said many times and have said since March, until we RS flip 69K, there's just not, I don't see a sustainable move that takes us into all-time high territory. And there's heavy liquidations here at the 65, 66K level and heavy liquidations at the 75K level. I think we get there eventually. For me, the narrative of the post-halving cycle and the 4-year cycle is still intact. I'm not willing to give up on that yet, at least not until we lose levels like this. And then I got to reevaluate for sure. Going to leave it there, guys. It was a long-winded one. I apologize for that, but I had a lot to share with you. Let me just run through my notes and see if I missed anything. Oh, yeah. I was showing you the indicators. I want to show you a couple others that were pointing to the local bottom for me here. And I'm telling you right now, this is a sneak peek because we don't really show these to the public very often. We can see rolling beta for BTC, very high here. This is historically showing us local bottoms, as it has many times before. And you can see it here, right? Boom. And then we got this jump yesterday. I have another one I could show you. same deal here, right? Funding has flipped. You can see that this kind of indicates that um, uh, we've got the vast majority of alts, Bitcoin and alts for that matter, have capitulated or are in the process of capitulating. So these are all a number of indicators that I've been watching that kind of, to me, point to local bottom. You may see something different, but now you know what I'm looking at. Hope you guys have a fantastic weekend. Hope you get to spend some time backed away from screens, doing something you love with the people you love. I've got, I got a last weekend with my full family. I'm taking my oldest to college next week. So, wow, mayhem in my world. Guys, I appreciate the follows and the support. OMZ and Anthony, thanks for being here. Thanks for your comments. I appreciate it. Please, hey, Anthony, I'm not going to argue with that sentiment right there. If you guys do me a favor, if you like these streams, do me a favor, smash all the buttons, share a comment, and share these live streams, share these videos and my social channels with your communities and help me blow this thing up. Thanks again, guys. Have a fantastic weekend. And as always, trade safe, my friends.